Welcome to Yellow Tunnel and TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have our weekly discussion of market conditions. We'll do live trading room and go over gold, go over silver market conditions, and any questions you might have. We're also going to go through the earnings strategy, similar to what we did last time. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Bob, present. Fred, welcome back. This is the difference for Yellow Tunnel and TradeSpoon. One of the main differences is that we have a team of financial engineers. My background is computer science. I have a master's degree in computer science, and we have a team of financial engineers that are building new models based on the neural networks. And I've been doing that for over 20 years. So I have a large experience managing publicly traded companies, actually, as a CTO. And for the past 10 years, I've been working, was the founder of TradeSpoon and Yellow Tunnel, where we have a team of financial engineers building new models and enhancing the algorithms. Disclosures are very important. Please read them. If you're new to trading stock or options, it's important to look at the disclosures. You can visit optionsclearing.com to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. All right, so let's talk about current market conditions. We'll talk about silver, gold. So gold looks like continues to rally, right? You have a clean breakout of gold above 192 level. This is, you have to go back to, I think, what do we say, 2011 to see the gold at these levels. So definitely demand for gold and for other asset classes, commodity types of asset classes like Bitcoin. Bitcoin didn't break out yet from all-time high, but it's trading at January all-time high. So gold looks like outperforming Bitcoin, at least short term. Nvidia kind of relentlessly continues to go higher. Every week we're making new highs. We're above 920 level. Next one in terms of positioning, right, for Nvidia. If you go to Nvidia, we were talking about positioning for eBay last week, and this week we'll do Marvel earnings. Next level is March 15 expiration, April 19. So yeah, 1,000. So you have a pretty large demand at the 1,000 level, and very large, 2,400. So, and people are selling 900 puts as well, 900. So there's definitely a lot of selling of the calls at a 1,000 level, where a lot of people think we could get to a 1,000 level in a relatively short period of time. It's all about interest rates. So one of the main reasons why the market continues to rally this week, we have another third red candlestick in interest rates. Probably gave up half of the gains from the beginning of the year, end of December, trading at 409 level, and broke through the support at 420. So as we head into the unemployment data tomorrow, the trend could continue, right? If the unemployment data comes in as expected on Friday, and if CPI data comes in as expected on Tuesday, then the passive resistance for yield is to continue going lower. For dollar to continue to drop, we have a pretty big drop in the US dollar with the expectation that there is no negative surprise in unemployment and CPI data. And you do have a strong rally in QQQ. I think it's almost retesting last week highs, and spiders posting new incremental highs. And small caps are trying to break out through this multi-year overhead resistance and have a marginal new highs as well this week. So that's the setup for the stock market. We do have short-term signals. This morning I traded Qualcomm. You can see Qualcomm also today up 5%. So there's a lot of catch-up trade. Marvell announcing earnings after close, and Broadcom, right? So there's a lot of anticipation that the Broadcom and Marvell are gonna outperform the market, and they will have positive beat on the bottom line, top line, and provide a forward guidance. So these are short-term signal. I closed by the end of the trading session. It's at 176. So this was a good signal. So let's see. Let's next. So I think in terms of gold, as long as interest rates continue to drop and inflation is contained, gold should continue to rally. The other scenario is that if inflation comes in harder than expected, then gold is also could be used as a hedge against inflation. So gold traditionally is in addition to being material, you have in precious metals, you do have use it as a hedge for inflation and for risk, right? So this is something that at some point market has to reconcile, right? If gold continues to go higher and Bitcoin continues to go higher, while equity continues to go higher. So looks like there's a disconnect, divergence, and divergence can last for a long period of time, but at some point it has to be reconciled. So either the gold pulls back and this is a false breakout, or equity is going to at least pull back shortly. So that's gold and silver. Any questions? FCX finally jumping with gold. Yes, Bob. Good afternoon, Vlad, Fred, Bob. Yes. So in terms of earnings, we talked about CrowdStrike. Let's look at the CrowdStrike from last earnings. Sorry about that. So CrowdStrike, again, pretty large VANA, high open interest. To make it more straightforward, there was a high open interest at the 350, right? You can see the front weekly options at this Friday's expiration, next Friday's expiration, and then April 19. So at 350. And CrowdStrike had and then you have people selling puts at 250 level and 200 level. So CrowdStrike, unlike Palo Alto and Zscaler, had a positive surprise, beat on the bottom line, top line, guided higher, and the stock did gravitate over 350 and traded at 350 level. I think it pulled back since then, but that was the setup for CrowdStrike. That's actually 330. So you can see that it's kind of gravitating toward that 340, 350 level, and actually was at 350 today and kind of got rejected and now back down to 340. So you can see pretty volatile price action as a result of the earnings, and currently trading near that strike price. So that's CrowdStrike. So let's look at Marvell. So a little bit different picture. You do have a lot of call buying, right? Pretty large contract size and pretty large VANA, negative VANA, a lot of open interest in buying 90, 95, and 100 calls, right? All the way, we've seen this all the way to the this Friday's expiration. So again, selling premium probably doesn't make sense right now because there's just a lot of expectation in Marvell earnings. I think it's a binary outcome, right? It's either they're going to beat on the bottom line, top line, and for guide forward. We could get 20% move, right? 20% move would probably get us to 100 level, or revert, or if they missed on the bottom line, top line, or got forward guidance, the reverse, right? There is some put buying, so people are less optimistic about Marvel. You do have a pretty large in April, less so in March, but even in March, next Friday's expiration, pretty large buying at 75 and 70 level, basically saying that, if they missed, the stock could move, 10-15% to the downside, and probably not going to stay in the middle. So if you don't think that the stock is going to trade in the middle, right, due to probability of distributions, right? So usually distribution looks like this, right, where the 2 sigma moves, there is this, happens rarely, and most of the time, you trade in the middle. But lately, because of the AI and NVIDIA and expectations, lately it's been moving to both. The 2 standard deviation, there's a probability of moving 2 standard deviation is a lot higher than historically, significantly higher than historically. So if you think that will continue to tomorrow, then let's try to set up this trade as well. All right, so let me put on these trades. So first, let's do can leg into it because Marvel continues to grind higher. So, well, the last call is 103. You can't really buy any higher than 103 call. So let's buy 103 call. It's trading at 88 cents. And then let's buy 95 call. Sorry, let me look at this. Yeah, 95 call. All right, so I bought 95 call and I bought 103 call with the idea that it will trade somewhere between 90 and 105 tomorrow, assuming you have beat on both top, bottom, and providing positive guidance. Let's look at how's Marvel moving. So it looks like it's pulling back into the close. And then I would sell the call, right? So I sold 100 call. Two contracts. Let's try to do it. Let's watch the trade. Maybe can squeeze a few cents. Was it trading at $1.90? Let's, maybe there's a rally towards the end, so let's do it $2.50. Sorry, I was doing 100 call, 100 call. Sell to open 100 call. For $1.62. All right, so you can see it under Elite Trading Circle. So it's a butterfly, right? So the maximum loss is, well, assuming I'm going to get filled on these prices, would be I'm selling 2 contracts, right? So I'm collecting $3.20, and then I'm spending $2.80. So we'll see where we go. So I mean, small debit or credit depends on where I'm going to get. If Marvel will continue to rally, then maybe I can get better prices. So that's basically if you have positive outcome, right? And it has to. I mean, ideally, in ideal world, the stock basically will close at 100 level, right? Then it's a maximum gain. One contract, I'm going to keep $500. That would be a maximum gain. And then if it doesn't come to the 95 level, let's say it's neutral or actually sells off, then whatever the debit of the spread butterfly, that's your maximum loss, right? Assuming equidistant strike. Here it's actually I'm not equidistant, right? 100, so I have a debit spread and narrow credit spread, right? So I have one debit spread, 95 to 100, where maximum gain is $5, and then on the downside, on the credit spread, I'm risking $3, right? I'm risking $3 if it goes against me. So let's keep an eye on Marvel, make sure it doesn't sell off into the close. I mean, ideally, if it rallies back to we have half an hour. And then that's, positive outcome. There could be negative outcome, right, where they missed earnings and you have a pretty large, the highest open interest is at 75 strike on the put side. So let's try to sell. So I did 66 put. So I sold 66 put. 66 put. Again, it's kind of outside of this large Vanna, so we'll see if that stays. So let's do the short put first. Marvel. 66 put. $66 put. And same thing. So the 2 contracts at 15 cents. So I sold 66 put, right, with the idea that it's not going to go outside of 66 level, right? And then I need to buy a put to hedge on both sides, right? So 1 to 2 to 1 butterfly. All right, so what did I buy? Marvel 66, 61. So 61 put, I'll buy 61 put to hedge. Actually, you can buy 62 put. And then I'm going to buy 70 put. 70 put. Okay, let's try to do it for 40 cents. Okay, so same thing on the downside, right? If you do have negative surprise, it will. This is positive Vanna was the largest strike, so I'm going to assume that it's going to gravitate towards 75 level, which is 10% pullback, which is reasonable. You know, if they missed an estimate, I think at least would be a 10% pullback. So for that reason, I am selling 66 put, right? Selling 66 put, that it doesn't get to that level, and then buying 70 put. Buying 70 put. It's a little bit outside 70 put, right? But it's kind of in the middle of these spikes. Because I think, you know, likelihood. I mean, if you think it's, you know, there is a high probability that it'll be to the downside, then you can move that butterfly to the right, instead of doing 70, 62, and 60, which is what, $4 differences. You can do further out. All right. So I'm trying to, so remind me before we leave, you know, I do need to buy this put. Don't forget, not to forget this put, and sell the call, 100 call. And Marvell looks like it's found some support around 83, and we'll see if it can rally into the closing. So butterflies are basically, you know, a debit, right? You long the volatility, and the middle strike is where you think it's gonna, that the worst case scenario, right? Because if it goes outside of the wings, then your loss is your maximum debit, right, that you paid, assuming equidistant prices, right? So be careful when you select the prices. You want the delta to be equidistant, $4. In this case, actually, since I'm bullish, it's a broken butterfly. It's a $5 debit spread and $3 credit spread. So $5 debit spread, $3 credit spread. Any questions on butterfly? Bob, thank you. Maybe trim some of the long positions. I definitely think, yes, market is overbought, right? I do think that Spiders is already at 520 or close, right? 515. So if you look at the positioning in terms of Spiders, we did say that there was a large selling of the calls at the 520 level, right? And this is the most liquid, you know, name that you can find. So March 15 and April 19. So in terms of March, you still have large, relatively large. It's decreasing. So 520, 525. So there is still overhead resistance at 520 and 525 going into the March. So most likely it's not going to break 520, 525 in the next week. Into April, there is already a large call selling into 530. So most likely market is not going to go much further than 530 by, you know, April 19th. So, and in terms of hedging, you know, you don't really have any hedges till 495. So you might have 5 to 10 points to the upside, but to the downside, you obviously have more room to the downside. And it's all going to be contingent upon CPI and unemployment data. If there's any negative surprises, market is overbought, yield is oversold now, right? Dollar is oversold now. So any negative surprise, and that's a recipe for pullback that everybody's been talking about. But you need a catalyst. You need a catalyst for that. They run together quite often. I mean, they do run. So yeah, so divergences can happen for a long time, right? Equity market can go up and the gold can go up. But, usually they don't, right? You can see gold usually spikes up when there is you know, 2008, right? We have 2007, 2008, you had a big spike in gold and then it continued, market continued to rally to 29 and gold continued to rally. So there could be a time where equity market, they moved in the same direction, right? I mean, in this case, it was for 2 years they were moving in the same direction. So it could be that for the next 2 years, it'll go in the same direction. But then equity market rallied and then gold sold off, right? And then, there was another spike in 2020 when we had issues, COVID, right, hit. So you do have these, usually, either the inflation spikes up or you have some kind of COVID type of issues and you have spike in gold. So we'll see. I mean, in 2008, it was going higher, right? So 2007, 2008, it was going higher. February 08, kind of crisis started and it reached the peak in November of 08, right? And then gold did rally. So we'll see. I mean, it could be same pattern. All right. Any other questions? Long Marvel calls. Okay. Long 200 Marvel at 71. So Marvel at 71. I mean, I'm trying to not to spend a lot of time because these options are extremely expensive, right? So if you're buying, just a straight, I mean, if you're buying 70 put, oh, so you own 200 shares and you are selling and you're buying a put. Yeah, I mean, I would definitely buy a put. I would definitely spend money and buy a put. If you have 200 shares, put, or you can buy a put spread, so you spend less money. Maybe you buy 70 put and sell 65 put to reduce the cost of. But I would definitely hedge. Because you do see in Marvel there is a lot of negative VANA, right, in these strike prices. So that means any negative surprise and it can quickly get to 70, 75 level. So I would hedge. Yeah, Europe rally can't use the Apple being Dow dog always lagging market rally. Yeah, the Apple is still underperforming. Robinhood, other than overbought, I mean, right now it's a risk on trade. So Robinhood, Coinbase, I actually looked at the positioning. You have a huge VANA, right? 6,000 at 20. So somebody are buying thousands of contracts thinking that by April it will be at 20, right? Be at 20. You need a positive catalyst and blah, 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 but at least in terms of positioning, somebody thinks that Robinhood is going to get to 20. I assume if inflation is data going to come in down and interest rates drop and dollar continues to drop, you're going to have that resurgence of irrational exuberance, and Robinhood will probably get to 20 level. But there's a lot of and I assume Coinbase is no different. I actually did not look at Coinbase. But I assume in terms of positioning, it looks extremely similar. Actually, I stand corrected. I am not correct. Actually, it's the reverse. So somebody's buying a lot of, selling a lot of, similar. So they're not buying calls, but they're selling large quantity of 200 put, right? With the idea that it's not going to go below 200. Here it's positive. So Coinbase and Robinhood are a little bit different. Obviously they have different exposure to trading in crypto. All right, in terms of other earnings, let's just not forget about Marvel. I don't want to. Okay, so it rallies. So hold on. Where's my strikes? Okay, so Marvel. Okay, so put I'll buy for 43 cents, so I don't forget. It's a little cheaper. And then it doesn't look like the call is, I mean, $1.28. Okay, it's fine. Doesn't look like it's moving too much. Okay, so let me just check. Marvel call. Okay, so 95 to 100 to 103. That's the iron butterfly on calls. Puts 62, 66, and 70. Okay, all filled. Okay. So I'll leave that screen so you guys can analyze. Right. So I need the stock to get above 95, right, and stay below 100. Or I need stock to drop below 70 and stay above 66. You know, that's the trade. Otherwise, I will lose my premium. If it stays in the middle or doesn't come close to these strike prices, then it's just, I'm going to lose money on both sides. But it's small, right, because of the nature of the credit spread for calls. How much did I pay? 2 times 250. Actually, calls I collected premium, so I'm making money on the call on the butterfly. I'm making money on the butterfly on calls, so that's good because it's 2 contracts of 100 and 1 contract of 197. On the puts, it cost me. Let's see, where's the put? 67. So I spent 32 cents. So and 43. So it's 10 cents. So 15 cents. So it cost me 15 cents, and I collected premium on the. So I'm actually received the credit. So I should make money even if it stays in the middle, right? Even if it stays in the middle. Okay. Let me know if you guys have any questions. Okay, let me look at my personal account, make sure I don't forget anything. So let me check my own positions. Okay, so Okay, so and then Marvel puts 66, 61, 70. Okay. Marvel looks good. Let me check my MDB. That looks good. That looks good. Costco also looks good. Okay. Let me know if you have any questions. Let's see. DocuSign 64. So about 10 minutes left. DocuSign 64. Let me know if you guys have any questions. DocuSign. Okay. So let's put on DocuSign so we can also watch. So DocuSign, big volume in 75 level, right? 70, 75, 80. So somebody thinks it could get to 75 or 80 level. So kind of same strategy, buying the butterfly around these strikes. $51. Okay. So I did 64, 70, 75 with the idea that it will stay somewhere in this region. And that's where you see the spikes, at least in March 15. I mean, you have negative, but it's small. So mostly it's positive. On the put side, it's anywhere from 45 to 50. So, okay. Okay, so I mean, DocuSign could sell off 20% or more. So, okay, so what's the strikes on the downside? Starts with 40. Biggest one is at 45.50. So let's see, 50 put. Ooh, it's expensive. 45 put. So 20% would be $10. So 45 put. DocuSign 40%. 30% would be 15.40. 42. Okay, 42 sounds right. So we'll sell 42. And then we'll buy DocuSign put. So buy to open put. Let's see, 45. What's the 45 trading at? 36 cents. So 16.25. 45, maybe even a little bit. 46. Okay, we'll do 45. To 55. Okay, and then DocuSign. Buy to open. 45, 42, 39. So I need to buy 39 puts or something. So 39 put. Okay, so 3 minutes left. All right. Sorry, these butterflies takes a long time to set them up. All right, so let me just review. So let's look at Casco. I'm just checking my Casco position. Casco is also announcing earnings. Casco looks good. MTB, I think I checked already. Looks good. And DocuSign looks good. MTB. Okay. All right. Any questions? Sorry, took me a little while. Thanks for your thoughts. Thank you, Fred. GE continues its wild ride. Yes, indeed it does. GE continues to outperform. Well, it's more than NVIDIA. GE up 4%. I mean, that's incredible. That's incredible. Yeah, that strangle. I mean, you could do a strangle. You could do a strangle, but you know, it requires a lot of premium, right? These butterflies requires less premium. TSM beating NVIDIA, you're climbing to the close. Yeah, Marvell is climbing to the close. Everything's climbing to the close. Okay, that's all I have for today. Thank you from Tradier Hub. Thank you. Were there any questions on Tradier Hub? No. Okay. Thank you on GoToWebinar. You guys are awesome. I'll see you tomorrow morning. Thank you.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.